General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. Third quarter, July, week 2. It's Monday the 7th. Monday sets the tone. It's not really a high impact news week. Yeah, Tuesday's nothing. No news until Wednesday. There was no news today, so Fed Watch probably didn't do nothing. We at 95% for July 30th. Yeah, we'll keep it simple. Because the next one's September, which is far. Like, we can start looking at that in August. It don't even make sense to track both of them. I don't think it was nothing on earnings. Tuesday, I don't even know them companies. That's why I don't pay for earning whisperers. It'd be like, look at all these companies. That's a lot of companies. You gotta really be an earnings trader to subscribe to Earning Whisperers. To even have a read on Penguin Solutions, you deserve every dollar you make. Nothing for NASDAQ Tuesday. Dollar on a daily. Okay, we came to the volume imbalance. I still prefer higher. Yeah, me personally, we didn't come down to catch the buy up. We just pushed. We didn't close inside the volume imbalance either. So or not the volume imbalance, but the fair value gap. The volume imbalance is up here. But this is not. It's a volume imbalance right here too. That really has to be the lowest hanging fruit to like look for sales because it's technically at EQ. I prefer higher, maybe even a run on this whole leg just for right now. Just it's not high enough yet. Not high enough to satisfy my need for a retracement entry. I demand premium at minimum. Um, and I prefer higher than that. Macro, I'm still bearish. I just want a real deal buy side liquidity stop hunt before we continue bearish for the next 18 months. Let's go here. Today, this is the ugliest down day delivery in the history. But we did come to the fair value gap. Ugliest down day delivery in the history of NASDAQ. Small range Monday, really? It's kind of a cool way to set the tone. I would say flat top, but we got a wick right there. Some baby wick. This not bearish. We can be setting up for buys, and it's just the Judas for the week. Daily chart, no daily liquidity was taken. Not even Friday. Oh, Friday was the what you call it? Friday was 4th of July. Inside bar day. Inside bar day. Still watching. Thursday as the main liquidity pools. Low of the week can be Thursday low and Thursday open price can be the mile marker for buys. Let's just put a line here. It's Wednesday. It's Thursday, 5 a.m. Hold up. Give me this low. Because this is Thursday's candle. Let's make it blue. And then let's go to the 4-hour. Okay, let's go to the daily. So I'm not tripping. Look. I'm like, all right, let's go to the daily. The market is closed. This is this price level on the daily. But on the 4-hour, we hit it. Okay, that's neither here nor there. That is weird, though. Definitely hit it. Let's look at this. Yeah, we hit it. We just didn't close. It's probably a wick. This is what sticks out on this chart. We stood this ground, trying to below that. Let's keep this here, current interval only, and let's see if this moves tomorrow. This is not going to show up on here. I'm watching this since this is a fair value gap. This order block candidate held true. 9 o'clock candle did 9 o'clock things. Retracements above this candle and sell. Target here. It's a logical plan. Selling above H4 highs. To target H4 failure swing. At 22,702.75. Sell above here. Let's put an alert here. Create. Okay. That's the plan. Selling retracements. Here's the plan. The target is 22,702.75. Alert set above H4 highs. All right. All right. That's that on that. Y'all have a good day. Peace.